Hey guys, welcome back to 90 Seconds with Chris. Today's video is going to be on corporate bankruptcy, Chapter 7 to be more specific, which is also called liquidation. Chapter 7 or liquidation is typically the process of bringing a business to an end by distributing its assets to the right parties in the right proportions. See my videos on assets, liabilities, and equity for more info on this. This Chapter 7 typically happens when a business is insolvent, meaning it owes a lot more money than it's currently worth, and as such there's no point in continuing the business activities of that business, and so it has to be stripped of all its assets. Once a company or an individual is in a situation where they cannot meet their debt obligations when they are due, all their assets are pretty much taken and sold off to pay the creditors and the shareholders in order of seniority or priority. The creditors or the bondholders get higher seniority, so they are paid off first before the shareholders are paid off with whatever is left off, if there's anything left off. Back to my bakery example where I needed $10,000 but only had $2,000 of my personal money to put down. I raised the difference of $8,000 through selling stocks and bonds to investors, $4,000 through issuing stocks, and $4,000 through issuing bond at a 10% interest and a 10-year maturity date. At this point, the company's balance sheet looks something like this. We have $10,000 in assets, $4,000 in liabilities, which is the money we borrowed from our bondholders, and $6,000 in equity, which was the money put down by shareholders. Go ahead and check out my video on balance sheet so this can make more sense to you. Anyways, after setting up the bakery, we get our first client, and then we make some cakes for him and send it to him. After eating the cakes, he gets sick and then takes us to court for $5,000 in damages. He wins the case, and then we're forced to have to pay him the $5,000. After this payment, our balance sheet will look something like this. Our assets is now only $5,000 because we had to pay out $5,000 in damages to our lawsuits, and then our liabilities is still $4,000, and equity at this point is only $1,000. You can do the math so this can make sense. At this point, the bakery is said to be insolvent as the balance sheet doesn't balance anymore. Initially, our shareholders put down $6,000, but right now there's only $1,000 left. Our creditors or our bondholders are free to force us into bankruptcy at this point, so they can claim their $4,000 back, and then that leaves us with only $1,000 for the shareholders. At this point, the bakery pretty much has to cease or stop all operations as we can't function on only $1,000, and the bakery has said to be liquidated or dissolved. That's it for the video, guys. I'm gonna see you guys in the next one. Thank you.